Welcome back to another edition of Level Up Life Money Hacks. So, today we're going to talk about strategies that the wealthy use to basically increase their wealth, with real world examples. So, this is going to be part one where we cover the first 10, and then we'll do the part two another time. So, with the first one, a strategy that's used is borrowing against your assets. So, you take out low interest loans against investments to cash out, without triggering taxes. Mm. So, a real world example of this is when Elon literally borrowed against his Tesla shares so that he could fund ventures and avoid capital gains taxes. So, let that shit marinate. You could do a Google search on it. I want to say he did this recently. It was either early this year or the tail end of last year. So, that's a real world example of that strategy, borrowing against your assets. Next, living below their means. Rich people spend far less than they earn to maximize savings and investments. So this example, we got the Oracle of Omaha, Warren Buffett. My man still live in the same house that he bought in 1958. Moving on, using leverage strategically. So using borrowed money to invest in high return assets. So, real estate investors use mortgages to buy rental properties while the tenants pay down the loan. You know what I'm saying? So, that's another strategy. Tax efficiency. So, structuring income and investments to legally minimize taxes. We have Jeff Bezos. He historically minimized salary income relying on stock based wealth. So, when you see in the news or even reading the news, however you get it, you might hear of more and more CEOs taking less money salary wise cash. They might only get 1 million a year, or they might only get literally $1, but they got like they getting 30 million in stocks if they hit certain criteria. So anyway, moving on to the next one. Owning appreciating assets. So investing in assets that grow in value, such as stocks, real estate, businesses. I'll even say crypto. I'll even say fucking Rolexes, rare ass cars, artwork. You know what I mean? So shit like that. Wealthy families hold blue chip stocks and commercial property for decades, along with everything I said, just told you. Rare jewelry, art, rare vehicles, things that go up every fucking year. All right, we're gonna move on. Using businesses as wealth vehicles. So, using an LLC or corporation to reduce taxes, build credit, and control income. So, many um, wealthy individuals will run personal holding companies to manage their investments. The next one is my favorite, or one of my favorites anyway, reinvesting dividends and profits. So basically, letting money compound rather than cashing out on them profits. So investors in the S&P 500 ETFs reinvest dividends to grow portfolios faster. So I think a prime example of this, if y'all up on the buzz with the ETFs, whether it's Roundhill or Yield Max, Yield Max recently made the announcement today that they're offering the existing ETFs that were mostly monthly. A lot of those are going to flip to weekly paying dividends. I think starting the 14th of October, 15th, and 16th. So, with opportunities like this presenting themselves, the average Joe that's, maybe struggling to get into middle class, or that's in middle class trying to go to upper middle class. I know I'm using archaic terms because right in 2025, you either rich or you poor, but just for the visual, the illusion of, shit, you might not be eating out of a garbage can tomorrow. You have stocks such as ULTY, CONY, MSTY. There's a bunch of them, but these are stocks that's out here slowly changing people's lives already. Okay, so next, we've been taught the opposite of what this saying is. We've been taught by many sources you should pay yourself first. Fuck everybody else. Pay your bills later. Make pay, that's why most of us is fucked up. So the strategy that they use, they invest first, then budget the remainder of the bread for personal use. So it goes on to say high net worth individuals set automatic investment transfers each month, which in my mind translates they treat this shit like a mortgage or car note, as they motherfucking should. And everybody that is young in their 20s, even early 30s, if you want to be in a great ass position, you better start thinking like that. And if you one of these millennial motherfuckers living in your mom crib, in the basement or still in your little room with the little posters on your wall from your childhood, you definitely better be putting that motherfucking bread into some kind of crypto investments like it's a goddamn mortgage or car note. So we're gonna move on to the next thing here. Number 9, using trusts to protect your wealth. You know, maybe I'm hyped because I recently seen the little Captain America movie, but I thought this was a fitting image, right? The trust is that shield. The trust can protect you against IRS to a strong degree. It can protect you against lawsuits. And if you young enough to be susceptible, it'll protect you against these damn Instagram baddies that might be trying to get you caught up and end up impregnated, thinking that you're gonna be trapped for the next 18 years. You got them trusts situated. Look, shorty, I ain't got no money. Your personal bank accounts might got 1,000 in there, 3,000 at most. The rest of the bread is in a trust, which is a separate individual, a separate entity. If you remember from damn near 20 years ago or earlier, they came out and said that businesses are people too. So that trust is a person. That's a whole other motherfucker that don't got nothing to do with you. That's why you set that shit up. It's a different entity. What they say, my name is in it and I ain't did it or whatever the fuck. That person might happen to pay you monthly, but you don't know nothing about that entity other than that it pays you monthly or however you set it up. So people coming for your throat, when they check your bank account and they see it's only 2 or 3 thousand, yeah, you can get that. That's all I got. They don't know that you got 1.5 in a trust that's not even in your name. You got it under some whole other thing with a whole executor and all of that, which they ain't gonna know because once again we're dealing with public versus private. But that's a whole other video for another day. So let's move on. I think this might be the last topic for now. Maybe I did the same slide twice. All right. Well, either way, this will conclude, this installment because, I ain't trying to do too much more tonight. But hopefully, these little gems and tips, sinking in, prompt you to do further research on your own. Actually, I got somebody close to me that got a business that they was about to shut it down. I said, don't shut that shit down. That shit been in existence for damn near 5, 10 years. I'll get that motherfucker from you. You know what I mean? So I gotta. I already did the research. I just gotta go back in there, read, and then go through the little steps on how to transfer that business over from them to me. You know, by those processes for that thing, will vary state by state. But you could look that shit up or just call, your local state, Secretary of State. If you know somebody that's trying to just dead a business, no, do not let them dead that shit, especially if they never did anything with it. A business that has no activity is still valuable. It has time on it. That time equates to credibility. It equates to you possibly getting loans easier than if you created your own business from scratch tomorrow. A 1 day business versus a 5 or 10 year old business on paper that looks okay. You know what I mean? It's gonna be easier to get business loans, credit cards for the business, that's been in existence longer. Um, you know, just stuff like that to think about. You know what I mean? I'm not saying this shit is guaranteed, but I'm about to make that shit goddamn work. But I'll holler at y'all. I'll circle back on y'all with part 2. Peace.